What if I told you that everything you need to know to master the next crypto cycle boils down to one word: liquidity? Yes, it is the lifeblood of both traditional finance and digital assets, and the key to understanding why prices surge or collapse overnight. Imagine being able to see where the money is flowing before the crowd catches on. With a crypto bro as president and a tech bro as the crypto czar, the game is changing fast. And guess what? The real winners are those who know how to track and capitalize on liquidity trends. My name is Kareem, and this is the Crypto Code by ICN Talks. Stick around, because by the end of this video, you'll know how to do just that, armed with actionable insights and powerful tools that will change the way you invest forever. You cannot afford to miss this. Guys, we launched our flagship ecosystem product, ICN.live. It's a brand new and fresh Web3 news platform where you will find articles in gaming, AI, blockchain, and of course, Bitcoin. And if you're interested in receiving great insights and market updates straight to your email, don't forget to subscribe to our newsletter. You can find all the links in the description below. This episode is brought to you by ZayaAI, a pioneering company in healthcare innovation, leveraging AI and blockchain to redefine digital pathology, setting a new standard in healthcare efficiency and diagnostic accuracy while drastically cutting down diagnostic processing times from hours to mere minutes. Zaya's aim is to make it easier for pathologists to diagnose diseases by using AI to quickly and more accurately analyze images of tissues and cells. ZayaAI is designed to be used by medical doctors in hospitals and by researchers in pharmaceutical companies. The company has recently launched its blockchain division and its own token. All details are in the description below. Check it out. Let's start at the top. Liquidity isn't just about how easy it is to buy or sell an asset. At the macro level, liquidity refers to the amount of money flowing through the financial system. It's influenced by central bank policies, interest rates, fiscal decisions, and global events. When central banks flood the market with cheap money, think of the quantitative easing policy we saw in the last decade, investors look for places to park their capital: stocks, real estate, and yes, crypto. But here's the catch. Liquidity is not infinite. When central banks tighten monetary policy, like the Federal Reserve has been doing recently with rising interest rates, that flow starts to shrink. Liquidity dries up, risk assets take a hit, and fear replaces greed. In today's world, with a crypto-friendly administration in the White House, the dynamics of macro liquidity are shifting. More government focus on digital assets could mean more capital inflows over the next few years. But make no mistake, understanding liquidity at the macro level is step one in mastering the game. Now, let's zoom in a little. Why does liquidity shift from traditional finance to crypto? The answer lies in risk and reward. Let's pull up the screen and go over what is happening in the markets to assess where the liquidity is flowing to right now. I also want to show you the tools that sophisticated investors are using to make informed decisions when trading blue chips like Bitcoin, Ethereum, and the top 20 coins. I will also show you tools investors with a high risk appetite use to find gems super early before they're even listed on CoinMarketCap. That's early. So let's get started. Trump has started his second term, and this is the perfect example of buy the rumor and sell the news. We saw major rallies when Trump won because of the pro-crypto messages he gave during his campaign. And now that he's actually in the White House, we've all been waiting patiently for him to officially talk about his plans for the digital assets industry. I love this tweet from Altcoin Gordon. Just 10 more minutes, babe. I think Trump is going to tweet something about crypto, and this was literally me for the longest time. Moving on, I wanted to then show you how you can see how investors have been waiting. All of us have been waiting very impatiently with rumors dominating the market. And here we saw rumor alert. Trump will sign the first crypto executive order in the next 24 hours. It's about time. And in true Trump fashion, we finally got it. Here we finally get the news we've been waiting for. Today, the time of filming, it is January 24th, and Trump has just signed his first executive order on crypto. I think it's very important for us to look at this and see what has been signed. So starting up, it says digital asset markets to strengthen U.S. leadership in digital finance. The working group will be tasked with developing a federal regulatory framework governing digital assets, including stablecoins, and evaluating the creation of a strategic national digital asset stockpile. Very, very interesting. The working group will be chaired by the White House AI and crypto czar David Sachs. We'll get into him a little bit later, and include the Secretary of the Treasury, the Chairman of the Securities and Exchange Commission, and the heads of other relevant departments and agencies. Next up, the White House AI and crypto czar will engage leading experts in digital assets and digital markets to ensure that the actions of the working group are informed by expertise beyond the federal government. The executive order directs departments and agencies with identifying and making recommendations to the working group on any regulations and other agency actions affecting the digital assets sector that should be rescinded or modified. And the executive order prohibits agencies from undertaking any action to establish, issue, or promote central bank digital currencies, CBDCs. That's pretty big. And the final one is the executive order revokes the previous administration's digital assets executive order and the Treasury Department's framework for international engagement on digital assets, which suppressed innovation and undermined U.S. economic liberty and global leadership in digital finance. I mean, the U.S., got to give it to them. Every 4 years, you never know what's going to come, and an executive order can just trump the one that was done previously. So this is very interesting, obviously very bullish. So let's look at how the markets have reacted to the news. I think this was literally like 8 hours ago, if I'm not mistaken. Let's have a look. This was, it was this morning. So let's look at what the markets are looking at today. Obviously, as expected, green across the board. If we looked at the week, actually, it was quite red. And as everyone was waiting for the news and waiting to hear if Trump was actually going to follow through with everything that he said, we finally had that today, and the market is reacting with that today. So here we see the day, and it's doing very well. You have H-bar. Lido is up 18%. I've been trading that for a while now. What else do we have here? Link, another American project, which we're going to talk about as well in this video. Solana doing well. Again, it's green all across. So what happened next? Oh yeah, I wanted to point out who is with Trump standing right here. As you see him on the side right here, that is David Sachs. So David Sachs is with Trump as he signs these crypto executive orders. And I wanted to talk about who he is specifically. So we'll go on to here and we'll see that he is on Fox News talking about the executive order. He was there with Trump when they signed it, and he will be heading both crypto and AI for the US over the next 4 years. If you guys don't know, David Sachs is part of the infamous PayPal mafia. He'll be leading crypto and AI for the next 4 years. Very interesting. My only concern I have is the conflict of interest. I believe he still has ties to PayPal. I'm not so sure about that, but will he be pushing an agenda on his investments and what he's focused on? I guess we'll have to find out. So, nonetheless, David Sachs is known to be pro crypto and pro Bitcoin, which is only bullish for our industry. Here's a great tweet of where they've taken all of the quotes he has said about Bitcoin over the past decade, I would say. I think the first one is from 2013, where Sachs confirms that he is a Bitcoin holder. He was buying Bitcoin in 2013 when the price was just $130. It's up 76,000% since then. And it's safe to say, I think he's holding a huge bag. So yeah, overall, very bullish on this appointment. It's going to be very interesting to see someone with this caliber, someone that is this well known in the tech industry leading this for the next 4 years. So how will the market play out after this news? So sentiment is clearly bullish. And what I'm seeing right now is a lot of predictions at the $200,000 mark. My personal prediction, and there's a video about this we uploaded a couple of months ago, is my personal prediction is $150,000. My only concern is if we go past that $150,000, that we may start seeing ourselves in a bubble, with extreme euphoria and greed in the market. But what do you think? Leave your price prediction in the comments. I'm curious to see what you think, and we'll definitely come back and see who was right. So let's see. It's definitely bullish. I mean, you can see as presidents do take office, usually Bitcoin does go up, even with Biden, even with Trump's first term, and then Obama as well. So very curious to see how this plays out. Obviously very bullish. I have strong conviction that we're going to see Bitcoin hit 150K this year. Next up, let's move on. So next up, I want to give an update on the Trump meme coin that was released. And this does relate to the topic that we have today about liquidity, because when we see hype like this in the market, and since it launched on Solana, obviously there was a reason and they wanted to push an American chain. But what happens usually when this happens is that anyone who has or is holding coins on the Solana chain, whether that's on a project that has amazing utility in DeFi or AI, and they see that Trump launched a meme coin, that liquidity that usually is in all those other projects tends to go right away to something new and shiny, let's say, right? So this is what we saw here. We saw a lot of that liquidity shift. First of all, we saw it go across chains. So if people were holding on Ethereum and they saw Trump launch on Solana, then you saw liquidity then flow from Ethereum to Solana potentially, because people wanted to get in on the action. But then again, within the Solana ecosystem, projects that had, people that were investing in projects on AI or, decentralized exchanges or any other type of projects, they would shift that liquidity as well so they can get in on this action. And that is all part of this liquidity game, right? It's about what's shiny, what's new, where's the attention going to, and that's how usually the liquidity flows. So it's never a boring day in our industry. I mean, what are the chances that this chart looks like Trump? It's going to be an amazing year for crypto. Okay, that was a terrible impersonation. But this is just fun. I wanted to share this because I thought it was quite funny. And let's move on. And this is what happens when whales take risks and ape in on hypes. If this is real, then this guy just secured one of the biggest bags I've seen on Trump. His name's Khalid Sejwani. I think he's also based here in the UAE. And he says, "Thank you, Donald Trump. Welcome back, Mr. President. 20 bleep dollars in 24 hours. I guess when you're at that level, you don't need to mention it's millions because that's what you deal with. So here you can see that he actually made $19 million off of a Trump. So what's happening to Trump right now? Let's take a closer look at the charts. Well, let's look at 7 days because it's still fairly new. I mean, we did see this meteoric rise from, what is that? From $7 all the way up to $70 very fast. So what was that date? Let's say it started off on 18th of Jan. By the 19th of Jan, it went up to $71. And as we all expected, it has now retraced. We saw a big drop here on the 20th of January where it went literally from $72 down to 40 and then bounced back up. And now we're seeing it trade sideways over the past week. Okay, to be honest, I did not get on this. I've never been into meme coins. I just can't find ways to look at it fundamentally and do my due diligence on it. So I've just never been the guy to take that kind of risk. All right, so as we discussed, liquidity has flowed from other projects to go to Trump's meme coin. And some people are not happy about it. I mean, Darky tweeted, "F Trump, he has destroyed all crypto ecosystem and he drained all liquidity with his stupid meme coin." This tweet got 429,000 views. I think some people obviously are annoyed that liquidity is moving from projects with utility to a Trump meme coin. But this is the game. This is how it has to be played. And if you're first, you can make a good return. All right. As a recap, Eric Trump tweeted, "In my opinion, there has never been a better time to invest in the United States. Bet on our markets, on energy, on technology, and on crypto. Bet on the greatest nation on earth, a nation that has been freed from its constraints and shackles and now has limitless potential," because this is his second term. "No question Biden left a mess, but that mess will be corrected and the next 4 years are going to be spectacular. Transformational wealth will be created and I hope everyone enjoys the ride." This leads us to our discussion on liquidity, to chase where the liquidity will flow to, especially in crypto. It's very easy to move in and out of trades. It's very easy to find the next shiny coin and move your assets towards that and invest in it. And for that reason, and this is my third cycle, I think this cycle is going to be very different because of what's happening in the United States. And I think the obvious beneficiaries are going to be US based crypto projects. They've said it and they keep pushing America first. And I think those are going to be the biggest winners in this cycle. So I think this is going to be the biggest change that I've seen on all the cycles. This one's going to be really, US based crypto projects are actually going to be the winners. I think before that, it used to be the opposite. It used to be every project did not want to be based in the US because of regulations, because of lack of regulations. But now the complete opposite has changed. And it's really incredible to watch and it's really incredible to see how this will all play out. So next up, I want to talk about the CEO of Morgan Creek Capital, where he talks about and suggests that XRP, Cardano, and Hedera could potentially be assets for Trump's crypto reserve. Again, the only reason is because these are American-based companies and projects. So that's why he's saying that. And I looked at CoinMarketCap today, and I'll scroll up, and they even added a Made in USA filter here, based on this narrative, based on Trump's push to focus and prioritize American crypto projects. So I'll scroll down. I mean, look at all these projects. These are all these projects are basically based in the United States. Avalanche, Chainlink, Cardano, Stellar, Sui is a great one as well. I'm very close with the folks there. Hedera, Litecoin, all of these projects are based out of the US, and I have strong conviction that these projects are going to do well this cycle. So let's see how this all plays out over the next 6 months. And I hope I'm right, and we'll see if I am right. So, okay, let's tie this all back to today's topic, right? So today's topic is liquidity. I found this great tweet and thread that explains liquidity and how we can use it to understand and predict price movements on the charts. So let's go through it. This is by Crypto Souls. Shout out to him. Thank you for doing this thread. It really helps understand what liquidity is and how we can use it to our advantage. I'm just going to go through this thread. He starts off with explaining, liquidation heat maps, then we'll go into Fibonacci levels, liquidity sweep, and then finally into a liquidity grab. And he really breaks it down nicely. So liquidation heat map shows where the liquidity is in the market and how liquidity providers behave based on color, the brightness, and the area. And they're used to represent the distribution of liquidity and order flow. If I zoom in, what you can see here, this is basically on a centralized exchange, and we'll talk about that a little bit later. And these are usually on big centralized exchanges, and these are usually blue chip crypto like Bitcoin, Ethereum, and the bigger players. That's a caveat that we need to say. But if you look at kind of where the red ones are, the red blocks, those are usually where the liquidity is concentrated the most. And that's usually a good sign of where it's going to change or bounce back on the price, because there's a lot of orders that have been put at that level that they're actually going to, either do a stop loss, or they're going to take profits at that point. So very interesting how this chart is being used to visualize. And we'll move down. The price action is a visual representation that price sweeps both sides of the range. Heat maps are very useful to identify support, resistance, and changes of trend. Price will go where there's liquidity unswept. And so here you can start to track and see how there's a pattern on when there's concentrated liquidity in one area where the price will either bounce lower or go back up. And then you can see that actually plays out every time. Fibonacci tracement levels, if you're not familiar, they're basically prices depicted as horizontal lines on a chart. They indicate where support or resistance could likely occur. And there are two types of Fibonacci levels. There's retracement and Fibonacci expansion. When deciding which direction and where we need to draw the fibs, we need to identify the direction of the trend. We have an uptrend, so we drag it from low to high. We attach the Fibonacci tools on the bottom and drag it all the way to the top right. So these are just tools you can use to trade and try to predict where the market's going depending on patterns that have happened before. So if you look at the golden pocket, refers to the key Fibonacci retracement levels of 38.2% and 61.8%. These levels are considered significant support and resistance levels. They will help you identify potential market reversals. Again, this is quite technical. If you're a day trader, these are things you should be looking at. I think it's very fascinating and interesting that there is a whole industry out there of people who really track trades based on patterns. And now with, being able to see these heat maps, it gives you a little bit more of an edge than if you didn't, because you get to see where the orders are being placed at different prices, and you can see the volume at that level. Usually a higher volume means something's going to happen at that price point. So very, very interesting. And then here he just goes into liquidity sweeps. Basically, a liquidity sweep occurs when large institutions or market participants execute large orders, and that is triggered pending buy or sell orders at levels of liquidity. And there are two types. There's buy side liquidity and sell side liquidity. Obviously, in an open market, you have the option to buy and you have the option to short as well. So all this information is taken, it's put on, it's visualized, and it helps traders figure out what to do next. So great tweet. If you find him on X, go find this tweet, and you can continue reading the thread. I want to move on just to go through focusing more on trading liquidity, how the strategies you can use to use this kind of visualization, and we'll go a little bit more into it to figure out kind of which direction a trade could possibly go, right? So one easy way to do this is to go on X and find the ones who are actually posting and doing live analytics, and this is what we're going to do today. So we'll just look at some of the information here so you know how to dissect this as well. So what is a liquidation heat map? We kind of went into that, how to trade it using heat maps, pools of liquidity, and then back testing liquidity. So it calculates the liquidation levels, as we discussed, based on market data and different leverage positions. Here there are different ways you can see it, so I'm going to show you just quickly. I'll zoom in. Here there's like 500x, 25x. So depending on the leverage that's placed on the position, you'll then be able to see how much liquidity is at that specific point for those specific price targets, right? So then that helps you kind of make your decision on which way it could potentially go up or down. So how to trade using heat maps? You identify the pools of liquidity on the market structure. You execute your trades when the price enters on those bubbles of liquidity, and then you use this level as a stop loss or invalidation. And here's an example of what he's talking about. Here, if we open it up, I'll show you. You can see for this specific trade that there's a lot of liquidity focused at the $66 mark, because you can see the red right over here. The $66,000 mark. Sorry, this was done earlier on Bitcoin. This is in April of last year. So $66,000 mark. And then at the bottom, you see a little bit more liquidity at the $62,000. But look, the price is actually trading here at $64,000. So you can kind of see that there's a lot of focus on the $66,000. That's if the price does go to 66, most likely it would trigger a lot of the target prices for a lot of these investors, and then probably potentially bounce down. So you could actually put your stop loss at that mark, because there's a lot of concentration at $66,000. This is just an example. You could do it obviously with today's prices, but this is just to give you an understanding of how this works. It's really fascinating. I love how they've taken public information, put it visually onto a chart, and it does help kind of with the guesswork in trading. Again, so you can find this on X, and he really goes deep into it. It's a great thread worth looking into. All right, so now that you know what liquidation heat maps are, one easy way to stay on top of it is by tracking it on X, where several accounts are posting up-to-date analytics on this. So I found as well, like Getting It Pure on X. So they just released this one recently. They're showing you liquidation heat map analysis for dominant majors. Again, these are only for the biggest tokens right now. So the blue chips. So BTC liquidation heat map as of today, I think this is as of yesterday actually, that you can see there's a lot of focus on the $103,000 mark, and as well again at the let's say $7,000 or $8,000 mark. So you can see that there's probably stop losses and take profits at those levels. So you can kind of figure out the gap there as well. And then they've done the same thing for Ethereum, where you can see clearly a lot of focus on the $3,380 mark. There's a lot of focus there. So it would be interesting to see if it breaks past that, but you'll see that a lot of people might get liquidated at that point as well. Okay, so they do the same thing with Solana and then Sui. So it's just great to see. Like for Sui, they talk about how we're seeing liquidation interest around $4.80. This level could attract the price, setting up for either a bounce if it holds. We could see a quick drop down towards $4.40 to grab a small bit of interest and then continue upward on Sui. So I think, yeah, for each one of these, they mention see here you go. For Ethereum chart, highlights liquidation zones at approximately $3,900, with this level acting as a magnet because there's a lot of focus and a lot of liquidity at that point at $3,900. Very, very interesting. I think this is a great way to visualize and see where the money actually is, because these are the order books that have been open on these major centralized exchanges. So it's fascinating that we have that ability to see all this information. And if you want to elevate and upskill yourself, here's the platform that Crypto Souls was using. It's called Trading Different. It is a great way, again, to see where all the money is going. One thing that you need to note, and what's important here, is that it is only for major exchanges. So Binance, BitMEX, Bybit, Deribit, as you can see here, and it's only for some of the the bigger projects that I think Trump was just added recently. But you can see like BTC, ETH, Cardano, Avalanche, BNB, and so on. So the pro is it helps you trade the blue chip, right? So you get a little bit of an edge on blue chips. But the con is it doesn't really help you figure out the low caps, okay, or where the next big potential trade could be, okay? So that's just something to note. If you scroll down here, there are videos that go deeper into how to use these. So there's liquidation heat map introduction, what is a liquidation heat map, and then how to use them. These are great videos that I found, and I watched them as well just to get into it and learn more about it. Very, very fascinating stuff, and it's a great tool if you are a day trader and you want to learn and see where the money is focused on. Okay, so then from there, I just if you're interested, obviously it's not free, unfortunately. It is a paid thing. You have the basic one, it's called the holder pack, and then you have the trader pack. And the biggest difference is the holder pack only does Bitcoin, and the trader pack will support all the other ones that we saw. So something to think about. But again, this is only if you're day trading and you're into blue chips, and this is something that I wanted to bring to your attention because it really helps and gives you an edge over others. Fantastic. So we looked at how we can use liquidation heat maps to help us make more informed decisions and trading decisions with the biggest cryptos like Bitcoin, Ethereum, and so on. But how can we use liquidity analytics in a different way that gives us an edge on how to find low cap projects with the potential to give us those super returns? But of course, we want to do this in a way where we reduce the risk of being rug pulled and getting wrecked. So how do we do that, and how do we work towards that? So I want to go into DeFi Llama. So we'll start here. And back to the topic of liquidity. This is a great way to see total liquidity across all chains. So right now, the total value locked, which is the same as liquidity in crypto across all the chains, is $124 billion, which is incredible. If we go down and we kind of track the chart as well, we can see that we haven't actually hit our max. So if we look here on November 14th, 2021, we actually peaked at 176 billion, around that. And now we're at 124 billion, which is interesting. And by the way, now there's a lot more chains as well. So, but the trend, let's look at the trend here. If we zoom in, I mean, from 2023, it was, I think it bottomed out right before 2024, and then now it's trending upwards and gaining more momentum across that. I want to go down as well, and then here you can start to see which chains are dominating the liquidity market and have the most liquidity. Lido is number one with $32 billion of total value locked. That is incredible. I've been trading Lido for a long time. It swings all the time between, I think, around like $1.50 to $2.40, and it goes back down and back up and back down. So it's quite easy to guess what's going to happen next with Lido. Lido, usually when it hits the 1.5, it does bounce back up to around 2.2. And then when it hits 2.2, 2.3, it does come back down. You can go check out the charts. That's been one I've been tracking for a long time and been investing in. It's a very interesting one. But 32 billion total value locked. That is incredible. Aave is number 2. Eigenlayer is number 3, and so on. So you can see here exactly where that liquidity is split up across which decentralized apps, essentially. And Lido here, you see 5 chains, which are Ethereum, Solana, Moonbeam, Moonriver, and Terra Classic. Aave, you have 13 chains across Aave. So a lot of these are multi-chain. And then, of course, some of them are just one. Uniswap is on 28 chains. I think that's the biggest one. Very interesting. Okay. All right. So here, the total value locked you see is $127 billion. Ethereum, obviously, is the biggest one with 67 billion. It has the largest market share. I think that's 50%, a little bit over. And then Solana has $12 billion total value locked. Tron is at 7.6, Bitcoin 7.2, Binance is at 5.6, Base is at 3.7, and Sui is at 1.87. So a lot of potential across the bottom ones, but it's incredible to see. So now that we see where the liquidity is across all chains, and it's at $127 billion, and I believe that's only going to grow over the next 4 years, especially with Trump. I predict this number to get to $500 billion by the end of his term. Let's put that's my prediction. $500 billion within 4 years of total value locked in crypto because of his policies. Right. So moving on, the next question, I know what you're thinking, is how do we find those gems? You know, the ones that you'll find before it gets onto CoinMarketCap. So using Dex Screener will get you far ahead of everyone else because this is the platform and tool you need to find projects before they get on CoinMarketCap. You could essentially find new gems early and before they are shown on CoinMarketCap because this tracks tokens on decentralized exchanges before they hit centralized exchanges. It's a very interesting tool to use if you know how to use it and if you set the parameters correctly, because if you don't, unfortunately, there's a lot of scams obviously in this space because everyone wants to take advantage, but there are ways to de-risk that and to look out for it. And I'm going to show you exactly how to do that. So, and the most important parameter, and it's exactly the theme of this episode today that you need to be looking out for, is liquidity. And I put it here front and center so that you can see it right away. And the way that you can put it there, because usually it's like price that comes first, you can scroll here and you get to the settings button. You press the settings button and now you can either hide or show things, or you can move them up. So I've moved liquidity to the top. I've put price as the second. Unfortunately, only 24 hours is the max. If there was more, I would put it, but 24 hours is the max. Market cap, volume, age, and whatever. You press apply. And now you have liquidity front and center because it is the most critical thing you need to be looking at. All right, let's take a step back and zoom out because we've been saying a lot. It's super interesting to see how hundreds of billions of dollars, of liquidity that are going across all chains that we saw on DeFi Llama trickles down to specific projects, right? So if you looked at this one, I'm just look at this NDAS Sol has $189,000 of liquidity, which is nothing, but that's part of that $169 billion that we mentioned earlier on DeFi Llama. So all these numbers that you see here aggregated gets to that total value lock. Across all chains. Okay, so it's fascinating that we can track this in crypto because it's all transparent, and platforms like Dex Screener does all the work and aggregates all of this data for us. So liquidity is the most important parameter because it can be misleading when you see a project with a fully diluted market cap of hundreds of millions of dollars, but 80% or more of the tokens are held by very few people, by 1 or 2 wallets, right? Because in theory, yes, they're worth hundreds of millions of dollars on paper, but the problem is that they can't sell it because there's no liquidity. And this is what you should always take into account when looking at these early projects. So let me just give you a technical definition of crypto liquidity pools because it's worth knowing. So a technical definition of crypto liquidity pools is a collection of funds locked in a smart contract, providing liquidity for trading pairs on decentralized exchanges. High liquidity is essential for selling large amounts because it ensures that there are enough funds available to absorb the sale without drastically impacting the price. So to make it easy, the more liquidity there is, the less drastic price change will happen once someone sells out of that pool. And conversely, when a project has low liquidity, like $191,000 that you see over here, very low, even a small buy order can cause significant price increases due to the limited supply tokens available. So to break this all down, the more liquidity the crypto has, the safer it is and the slower it can move up or down in price. So what is the right amount of liquidity that we need to consider when analyzing a new opportunity in the market? Well, first and foremost, I would select a chain that is getting a lot of attention. And as we discussed and we showed recently on X, Trump's focus on US-based crypto projects are the chains that I'm excited about this cycle. They are Solana, Base, and Sui. And as we saw on DeFi Llama, they all have significant amounts of liquidity on those chains. So for this video, we'll look at the Solana chain And right now on Dex Screener, I'll show you how to do that. So let's go to Solana here. You click on it here. And then at the top, you'll see all the decentralized exchanges. Radium is one of the largest ones. So we'll just click on Radium to start with. Let's just look at Radium to start with. And once we go from here, what is a good amount of liquidity that we want to filter? So what we can do is we'll go to liquidity and we'll click on that so we can go through it and see the top one. So we look at Fartcoin. Everyone's been making noise about Fartcoin. Obviously, its market cap is $1.48 billion. This is an AI agent that we discussed earlier. Liquidity is $27 million. That is extremely healthy. But when someone buys or sells in this pool, price will not jump up high or low because of the high liquidity in there. Number two you have on this is Pengu, which is part of the Pudgy Penguins. We also did a video about that. We'll leave the description below. And then you move down, you start seeing. So what is that amount that I'm looking for? The sweet spot is the $2 million liquidity. So we'll look around here. We see DogeAI is at $1.9 million. I think anything from Safe Moon of 1.7 million all the way to 2.2 million. There's a lot of memes in here, guys. Like that's just becoming the trend. And I honestly don't trade memes because I can't do the fundamentals. I don't know who the people are behind the project. I don't know what the plans are. So for me, it's just, it's not something that I'm looking at. But if I did want to take a risk and, throw a small bag just to see what happens, if I had done that on Fartcoin, I probably would have made a nice bag. But you never know. These things can go both ways very quickly. Another trick you can do is set filters. So for liquidity, we can put 1.5 million to 5 million. And all you have to do is go to filters here. You put 1 million to 5 million, and then you can apply it. And then you'll see all the projects from, up to 5 million. So that will help you kind of just, limit what you can see as well. So usually I don't need to do that. So I'll just reset it. And what we can do now, so let's find one project and add it to our wish list. I will continue to do research on this and decide if it fits my investment appetite for this cycle. All right. So we'll look at liquidity and we'll put it all the way down, starting from Fartcoin, Pengu, Vine. Unicorn Fart Dust has $6.4 million. Pippin, Buzz. So you can see all of these. Anything above 1.5 million is worth looking at. Obviously, I had to hit Baron, so official Baron meme, 1.5, but they're all down like 30% over the past 24 hours. So these are the ways I would look at these. I don't think these tokens are trading on centralized exchanges. So this is a way to get in. If you wanted to dig a little bit deeper, you can open up like DogeAI, for example, which is on Solana, and then you can go in here and see the holders. And what you can see is that the biggest holder has 20% of the supply, worth $15 million, but again, they have $15 million on paper because even if they wanted to sell it, there's only $2 million of liquidity. So they would be stuck with that bag. They can't really sell it. And so that's the wallet you want to keep an eye on because if they move any of that funds, usually it's going to really drastically impact the price. All right. So my research would look at the fundamentals of these projects, such as their team, social media presence, plans, and so on. I usually put these in a watch list, and that's very easy to do. You just come here, you put it on your watch list, and then you can come back 2025, let's say, and then you can come back and look at it and do your research when you have time. All right. So these are the tools that a lot of the sophisticated investors with high risk tolerance are using to find and invest early in these types of early low cap projects. So as a recap, we've seen liquidity shift from traditional finance to digital assets. It's fascinating to see how far liquidity trickles down. It started with Bitcoin, and then as Ethereum and other chains started gaining traction, we saw liquidity flow across a number of chains. And once inside the crypto market, liquidity is anything but static. It's a living, breathing organism that flows to where the hype is strongest. Take the recent AI boom as an example. Virtual protocols on Base has dominated headlines with its AI agents, and liquidity has poured into its ecosystem. Why? Because the narrative is fresh and investors are chasing the next big thing, but hype doesn't last forever. Just weeks ago, we saw the Trump meme coin explode on Solana. Within days, liquidity shifted from DeFi protocols to meme coins. This is a pattern we've seen before. When the market gets bored of innovation, it turns to speculation. Understanding these shifts is critical. Liquidity moves where attention goes, and attention in crypto is often driven by narrative. Use platforms like DeFi Llama and Dex Screener to track on-chain activity and spot these trends early on. If you're seeing a surge in wallet activity on a specific chain or protocol, chances are liquidity is following. So why is liquidity so important when analyzing a crypto project? Simply put, liquidity determines whether a project can survive and thrive. A project with low liquidity is like a car with no gas. It doesn't matter how shiny it looks, it's not going anywhere. And here are the key metrics you should track. Number one, trading volume. High trading volume means high liquidity, which reduces price slippage and makes it easier for investors to enter and exit positions. And number two, total value locked, TVL, measures the amount of capital staked or locked in a protocol. It's a very good indicator of trust and utility. And number three, market depth. This refers to the ability of a market to absorb large trades without significant price changes. Thin order books can lead to massive volatility. So projects with strong liquidity liquidity are less vulnerable to market manipulation and more likely to attract institutional interest. But on the flip side, low liquidity increases risk, as even a single whale selling their position can crash the price. So liquidity is the single most important factor in understanding financial markets, and crypto is no exception. By tracking liquidity at the macro level, following its flow into and within the crypto ecosystem, and leveraging tools to analyze these trends, you'll be equipped to make smarter, more informed investment decisions. And in a world where a single narrative can send billions of dollars rushing into a project overnight, understanding liquidity isn't just an advantage, it's a necessity. So whether you're trading meme coins, staking in DeFi, or investing in long-term projects, keep your eyes on the flow of capital, because in the end, liquidity is the name of the game. If you made it this far in the video and you found it valuable, make sure to like, subscribe, and hit the notification bell. Stay ahead of the game, stay informed, and I'll see you next week.